Hello traders, the title of the video is how to trade the nameless candlestick pattern like Steve Nison. So you may be wondering who is Steve Nison. Well, if you are trading candlestick pattern in a financial market, you must know who is Steve Nison. He's an American. Steve Nison holds the distinction of introducing Japanese candlestick charting to the Western world. As such, the foundation of all candlestick information in America and Europe is based on the foundation of Mr. Steve Nison work. All right. So you can Google search Steve Nison. Here it is. This is Mr. Steve Nison. That's him here. That's okay. Handsome man with the mustache. The distinguished Steve Nison with the distinguished mustache. That's Steve Nison. If you want to follow him on Twitter, the handle is at Steve Nison. This is the king of a candlestick pattern. And today I want to talk to you about the nameless candlestick pattern, how to trade that nameless candlestick pattern like Mr. Steve Nison. Alright, let's get started. Which pattern am I talking about? Alright, so this is it, the candlestick pattern is here, is it? A bearish candlestick bar, followed by a bullish candlestick bar, and another bearish candlestick bar. So you remember what I always say when I'm talking about candlestick pattern. I say to traders that whenever we hear the word pattern, we must think of what? Location. Location, all right? Where does the pattern form? How does the pattern form? The location of the pattern is the most important thing. So you may see that pattern somewhere else, and it may not work. So you want to understand that whenever we are talking about pattern, we must think of what? The location. Location, location, location. All right, here it is. So what is happening here? We see a bearish candlestick bar is formed. All right. Then that bearish candlestick bar is closed. It must close. It's closed. It's closed. That bearish candlestick bar is followed by another bullish candlestick bar. What's going on here? So bearish trader sold it first, but bullish trader came out and pushed it up. Okay, all right. So there is a bit of fight between what? The bullish traders and the bearish traders. All right. Now the bearish trader come back and sold it one more time. But what is happening here is that the price is not forming a new lower low. Though the bearish trader sold it for the second time, the price did not form a new lower low. It's similar to the double bottom chart pattern. So you remember the double bottom chart pattern? So somebody sold it down, price came to a support level. All right. Then, okay, price tried to go up, and the bearish traders sold it down. But as they sold it down, the price failed to form a new lower low, but we are having equal low. So when we see like this, usually as the price retests in that support level, bullish traders are readying themselves to buy one more time using what? A multiple time frame trading method, and then we have a double bottom chart pattern. That unnamed or nameless candlestick pattern is this one here. So you see the bearish candlestick bar down, bullish candlestick bar up is also closed. Now bearish traders sold it, boom, down. But very, very important point, the price is now forming a new lower low. All right. So after this one is closed, the expectation is that the bullish trader will be readying themselves to buy one more time, creating that long candlestick bar here. All right. So one thing I want you to understand is that when you are using candlestick pattern, you want to understand what is going on, because anytime you are using any candlestick pattern, you want to understand what is happening. But probably you already know you already know about this candlestick pattern. You may decide to walk away from this video, and I will say to you, it's a big mistake. And at the end of the tutorial, you understand why I say it's a big mistake if you watch only part of this tutorial. All right. So in order to understand that pattern, which some traders already know, is that the first condition for that pattern to be valid, okay, bullish pattern, is that the price should be going down fast. So whenever you see that those three candlestick bar, bearish, bullish, bearish, and you're expecting the fourth one to be bullish, the price must be going down fast. So why? Because if a financial instrument is going down, it's looking for a better support level. So where that pattern is being formed must correspond to a key level after the price is going down. Price going down, going down, going down, going down. We reach what? A key level. How do I know it's a key level? Because of what has happened before. It's a key level. It's a key level. All right. Price breaks above it, run up. Now it's coming back to retest it. So first condition, price should be going down. Second condition, price must be at a key support level. Key level, very, very important. Once those, so this is about the location, the validation of the pattern. By checking first, was it going down, looking for a better support level? Okay, good. Is it now at a support level or a key level? Good. Okay, is that the correct pattern? Yes. Now we can ready ourselves to buy using what? Multiple time frame trading method to trade it. If you see somewhere else and you don't see those conditions, you may skip it. S-K-I-P, skip it. All right. But one more thing, to improve this candlestick pattern, we can also look at the structure of the price that brought the price to that key levels. So earlier wave traders quickly understand what I meant by the price structure. Ordinary trader may struggle to understand what I meant by price structure, how the price did come down to that specific key level. So we use, as an area wave trader, if you are not area wave trader, we talk about minimum price move is free. By the way, if you want to start learning about area wave, go to 24 Idiot Waves YouTube channel. Minimum price move is free. Right, come to a key level, that will be one structure that we are looking for. So if we see that it price from 1 to 3 to a key level, followed by that specific three candlestick bar, bearish, bullish, bearish, all closed on that particular time frame, we will be readying ourselves to buy. That's another verification that will give us a bit of confidence. There's no confidence in the financial market. We give a bit of idea that the price has a high chance to go up. So use it in conjunction also with the price structure. So you may say to me, George, I don't see minimum price move free here. But there is another price structure. Is that so without going too much deeply into the price structure subject, all right, look for price structure like this, 1, 2, 3 to a key level, and then the pattern. Look also for 1, 2, 3, 4, 5. So price going now, you see here, this is 1, 2, 3, 4, 5, either 3 or 5. 1, so 1, 2. Doesn't matter whether they are overlapping, so this is nothing to do with area wave. All you are looking for is 5, because computers are using that. Okay, trading robots are using 1, 2, 3, 4, 5, 1, 2, 3. They are using all these structure to make decision. So here it is, 1, 2, 3, 4, 5 to a key level, or we are looking for 1, 2, 3 to a key level, and then we see bearish candlestick bar is closed, bullish candlestick bar is closed, bearish candlestick bar is closed. Now the following candlestick bar, we are readying ourselves to buy it at a key levels. This is about how to trade the nameless candlestick pattern, like who? Steve Nison. All right. Okay, let's go back again to the chart. So here we have 1, 2, 3, 4, 5. We can look for 1, 2, 3. So what is happening here? The price was going down, looking for a better support level. Now it's at a key support level, key level. All right. Here it is. The pattern is now at the right place. Bearish candlestick bar. So bearish traders are selling until the price reach a key level, a support level, a high impact a key level, a significant key level. The bearish trader will not ignore it. They will not ignore it. So we see the fair reaction. Are they taking profit? Do we have buyers? Following candlestick bar is bullish. Okay, good. Will they sell it again? Now they sell it. Is the price forming a new lower low? No. So what is he telling us? He's telling us that there is a high chance that we may see a reversal or the bearish momentum is diminishing. We do not assume anything. We draw that line which I have here on my chart, and as always we say priority to bullish signal above and priority to bearish signal below, and we do what? The next step, the trading drill. Now we have, after those three candlestick bar are closed, we have what? A bullish trading setup. Anything is possible. The price can break below that red trend line, which is our warning line, and continue to go down, or it may find a support there. Therefore, the next step, or to polish our candlestick pattern trading, we must now use a top-down trading method, a multiple time frame trading method, or different time frame trading method. So after this candlestick bar here is closed, all right, we use different time frame. Go to the daily chart, wait for your signal, all right. Go to the hourly time frame to intraday trade. You see on the forward time frame, you go to the 50-minute time frame for your signal, and you go to the 3 minutes or 5 minutes for your entry. See on the daily chart, that's your trading setup on the daily chart. You wait or you go to the hourly time frame for the signal, and you enter the trade on the 10-minute time frame, and so on and so on. You see on the weekly chart, trading setup, 4 hours or 2 hours time frame for the signal, and 50-minute time frame for the entry, and so on and so on. Use at least 2 time frames or adopt a thorough multiple time frame trading method after the setup is in place. The setup, this nameless candlestick pattern, is formed of one bearish candlestick bar plus one bullish candlestick bar, and the third bearish candlestick bar failed to exhibit a new lower low. Now, as the fourth candlestick bar is about to begin, we draw the line and we implement a top-down trading method to trade it. This is about how to trade the nameless candlestick pattern, like Mr. Steve Nison, the king of candlestick, the Japanese candlestick charting. As always, if you have any question or suggestion, all right, put in the comment section, and of course I will be recording another video to answer your specific question. As you can see here, the candlestick pattern trader understand that, and you can see the following candlestick bar is quite long, followed by another long candlestick bar. You see, so it's good for day trading and also for swing trading, even for position trading. If you see this on a quarterly chart, as a swing trader, be ready to swing trade for many months. And look for higher lows, higher high, and cream it like a pro. All right. As a day trader, you see on the forward time frame on the daily chart, take it like a pro and use a top-down trading method. Any question? Put in the comment section. Suggestion? All right. Blah blah blah. Put in the comment section, and of course, I will be recording another video to answer your specific question. If you think that, Joe, you have done a very good job today, all right, let us know by giving us the thumbs up. If, all right, you think that, Joe, that was another poor performance, my friend, all right, let us know by giving us the thumbs down. That will put me under pressure to work harder for you, my friend. All right, but if you think that this is an essential tutorial that other candlestick pattern traders must watch, all right, make sure they watch it so they do not mess up your trade, okay, by sharing it on Google+, on Twitter, and also on Facebook. This will conclude our discussion today about how to trade the nameless candlestick pattern like Steve and Nison. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to trade the nameless candlestick pattern like Steve Nison. Happy trading to you all and speak to you soon. Thank you for watching.